We're joined now by Dr. Derrell Peel, our OSU Extension Livestock Marketing Specialist. And Derrell, we have a new year. How are the cattle markets doing as we're getting started?
Yeah, you know, fourth quarter of last year was a little bit rough. We had a lot of turbulence, but by the end of December, we were seeing it settle down a little bit. So we're starting off in the new year very strong with cattle markets. Feeder cattle markets, fed cattle markets have all come out very strong here early in the year. And I think we've picked back up with the strong fundamentals that are driving this market.
What is the latest that you're keeping track of in terms of beef imports and exports?
Yeah, you know, the shutdown delays caused a lot of delay in that data, so that we just recently got data through October. So we're still catching up on that data, but bottom line is, we continue to see exports lagging behind. We knew that would happen with the high prices and decreased production we've got in the U.S. So we're down about 12 to 13% on beef exports for the year. Most of our markets are down. Of course, the big one is China, because we've been in a tariff and trade war with them. So we're essentially out of the China market right now. On the import side, of course, there's been a lot of talk about beef imports the last few months. Imports are up through the first 10 months of last year, about 20%. And Australia is the biggest source of beef imports. Brazil was the biggest source through the first half of the year, but then with the additional tariffs and all of the turbulence associated with Brazil, they fell off in the at least through September and October. And then, of course, those tariffs went away in November, so we have to wait and see where they come back to at the end of the year. But, again, imports are up, trying to supplement the fact that beef supplies are down in the U.S.
Keeping on that theme, what are some of the supply and demand fundamentals to keep in mind in 2026?
Yeah, so, in addition to that, obviously, we're still watching this cattle cycle thing. We'll be getting USDA data the end of the month on where we are with beef curd inventories and maybe more importantly, replacement heifer inventories. I expect that we've stabilized the beef cow herd. It might even be up just a smidge, but that's because beef cow slaughter has dropped so much. Culling rates have dropped so much the last couple of years. I think it's going to show that we have very limited prospects for any herd growth in 2026 and probably 2027 as well. So we're still continuing with these very tight fundamentals. And in fact, until when we start retaining more heifers, it's going to mean that feeder cattle supplies will get even tighter. Feedlot inventories will continue to fall.
What does all this mean for cattle producers in the year ahead?
Yeah, again, the fundamentals, both supply and demand supporting this market. We're going to continue to see prices. We expect higher average prices for cattle and beef in 2026. So, producers want to just be positioned as well as they can to take advantage of that. Everybody's situation's a little different, but certainly unless we get into, some additional weather issues or other things, there's opportunities for producers that really are unprecedented as we go forward with the level of cattle prices that we're seeing.
All right, Derrell, thanks a lot. We'll see you again next time.